Good morning, everybody. Welcome to Pathfinders Trainings. I'm Yogeshwar Vashishtha, and we'll be talking about stock market today. And thanks to technology, I'm sitting in my office. You're sitting at your place, and we can still communicate and talk and share information with each other. The topic today is stock market for a second source of income. That's what it is. I'm Yogeshwar Vashishtha. Disclaimer: trading and investing is subject to market uncertainties and there is a chance of losing. This training is for education purpose. Please use the material with your own risk. So this is a standard disclaimer that I always, but then everything is risky. Life is all about risk. People who can manage the risk with their skills become successful. Those who can't become unsuccessful. And at the start of the topic, I said trading for a second source of income. And income is the key. I've seen a lot of people who have spent years and years into the stock market and they are not able to create incomes here. They're able to make profits or make losses, but eventually income eludes them. What is the definition of the word income? Income is that money which is consistent in amounts and in frequency. For example, your salary is the income. Why salary income? Because you get it every month, you know how much you will get, and all your expenses are based on it. A lottery cannot be classified as an income because there is no certainty of you getting it and there is no consistency into it. You have given a house on rent, you get a rental income, which is consistent. So in the stock market also, till the time you're not able to create incomes here, that means consistent money, which you can use for your expenses or your future, coming to the stock market becomes a very painful exercise. I've seen a lot of people who come to the stock market, try their luck, so-called, who says, okay, let me come here and invest my money and my money will become double. So all kind of greeds bring people to the stock market. Then many of the people make losses and with fear, they go away. So today we'll be talking about how you can get away from the fear and the greed and take the market as a skill by which you can consistently make money, you can create incomes. That's what we'll be talking about today. These are your four human needs: financial freedom, peace of mind, health and energy, and loving relationships. Unfortunately, financial freedom eludes most of the people. What is financial freedom? Having more money than you require. That's financial freedom. But since most people do not get financial freedom, so most of the time is spent in trying to achieve financial freedom. And number two, number three, and number four suffer. Peace of mind is missing. Health and energy takes a backseat. And there is hardly any time to make the relationship strong, whether it is a husband-wife relationship, relations with your friends, or other relationships. That's why the whole focus becomes in life to earn more and more money, and people try their best to attain financial freedom. And how will financial freedom come from? Financial freedom comes by understanding these three equations of money, the three money equations. The first equation of money is income minus saving is equal to expense. This is the equation of financial freedom. You earn money, you save some for your future, and remaining you spend. This is the prudent person. This is the person who says, I want to achieve my financial freedom as fast as possible. How many people actually fall into this category? Very, very less. In fact, most of the people fall into equation number two. Equation number two is income is equal to expense. Whatever comes is spent. And this is the most common equation for most of the people. Income and expense keep on matching here. So, and number three equation of money here is, income plus loan is equal to expense. This is the trap. In fact, you'll be so surprised how many of you are in this trap these days, because getting a loan is so easy. So most people want to have the desire fulfilled now and pay for it later. So income plus loan is equal to expense, but we forget that loan had to be paid. And you ask yourself a very basic question: in which equation am I in my current state? Am I in equation 3? Am I in equation 2? Or am I in equation number 1? And only when you go into equation number 1 have you started moving towards financial freedom. And today we'll be talking about how we can take stock market as a route by which you can achieve financial freedom. This is our enemy number 1. Enemy number 1 is inflation. What is inflation? Continuous devaluation in the purchasing power of your money. This is what inflation is, a continuous devaluation in the purchasing power of your money. Remember the salary of your grandfather on a senior position. It was 500, 600 rupees a month. Then if I come to 80s and 90s, when our fathers were working, the salary, a good salary was considered about 10,000, 15,000 rupees a month. Today, a good salary is about 1 to 2 lakh rupees a month. But these are more or less the same amount of money because they have the same purchasing power. And how is that? That is because of the rule of 72. What is the rule of 72? 72 divided by the rate of inflation is the number of years in which your purchasing power will become half and you will require double the amount of money just to have the same purchasing power. For example, in India, the average inflation is about 15% a year, not 7-8% that our politicians tell us, the real thing that are inflating. Your education costs, your grocery costs, the cost of your travel, the cost of your entertainment, the cost of your fuels. On an average in any growing economy, inflation is about 15% a year, which means if I say 72 divided by 15, this is about 5. That means every 5 years, you will require roughly double the amount of money just to have the same lifestyle. That means with every passing year, your purchasing power reduces by about 15%. And if your money is not growing by at least 20-25% every year, you will actually, become poor. And in your job, if you're getting an increment of 50% a year, 100% a year, great. Then you are in a great job. How many people get that? Very few. And that's why it is a challenge for most of the people to achieve the financial freedom because inflation catches up. And that's the reason, everybody tries for a second source of income. Somebody tries to do an additional business. Some people go and they are, trying to put money into stock market. There are multiple ways by which people are trying to achieve that second source of income. And stock market is an option. It's a very good option. And that's what we will be talking about today, how you can have it as a source of income. The challenge that we'll face now is that at the age of 60, there is no pension now. In our fathers and grandfathers' time, there was a security of pension. At 60, you retire and then you get a pension from the government, from your job, and with that, you live the rest of your life. Earlier, there were joint families. Even if there was a money problem, one member of the family used to take care of the other member of the family. Now, those days are not there. We are in the age of nuclear families, number one. And number two, you won't get a pension. So, your old age, you will either have to survive on your savings, whatever you have. At the age of 60, do people have enough savings or no? Because we are a responsibility-driven society. We have to take care of our children, our old parents. We have to marry our sisters. So the problem that happens with most of the people is by the time they are 60, they do not have enough savings. And if enough savings are not there, then it would be a problem because after 60 also you will require money. And in fact, you will require more money because of inflation. And at 60, once you retire, most people do not have another job because nobody gives a job to a person who is above 60. That means you either live on your savings or become dependent on your children, or there is option number 3, which I'm going to talk about, is learn a skill by which you can make money sitting at home. without going out, without working for anybody, without selling anything to anybody, without doing any sales and marketing, sitting at your home, if you can make money just by, having a computer internet connection and the skill to trade the equity, commodity, and the forex market. This is what I'm going to talk about today. And this is a skill I believe everybody should have. And once you have this skill, you can not only create a second source of income now while doing your job or while doing your business, but after 60, you do not have to, go on anybody else, to, look for money. You can create your own money sitting from home. So this is what stock market is all about. Stock market as a skill make money. And this is when I say, when does it become a skill? When it goes from the zone of dependency into the zone of becoming independent. Most of the people come to the stock market without knowing anything. In fact, stock market is very closely equated to gambling in India. It is not taught anywhere. Please understand, stock market is not taught in the schools. It is not taught in the colleges. There are no reputed institutes teaching stock market around. And most of the people are learning it either from books or from friends or from brokers. So that's why most of the people come and think that somebody else is supposed to make money for me here. And many people confuse stock market as an investment. In fact, this is a very common myth in the stock market is an investment. What is the definition of the word investment? The definition of the word investment is, if you put your money somewhere and just by putting the money there, if profit is guaranteed to you, then and only then it is called an investment. For example, if you put your money in FD at 9% a year, the moment you give your money to the bank, your 9% a year is guaranteed to you, and you get a piece of paper from the bank guaranteeing you your 9% a year. That is an investment. When you put your money into a money back scheme of SBI, insurance, then the moment you give your premium checks to them, your money back is guaranteed to you, you get a piece of paper. That is an investment. But when you buy, 500 stocks of Tata Motors or Reliance or TCS or a Lupin or a Sun Pharma, do you get a piece of paper guaranteeing you your 20% a year or 30% a year? Has anybody ever got a paper like this here? If yes, say yes. Nobody can say yes, because nobody gets this kind of paper. Because the mechanism of the stock market is entirely different. The mechanism of the stock market is that you first have to buy and then you have to sell. Only when you sell, will you get a profit or a loss. If you bought at a lower price and you sold at a higher price, let's see this with an example. Let's go here and let's take any stock. Let's take a stock like Unitech. If I take Unitech here and open the chart of Unitech, this is the monthly chart of Unitech, and let's look at a guy. Let's take a worst case scenario or a best case scenario. Somebody bought Unitech here at 8 rupees in the year 2005 and 2006. The guy, the so-called investor, bought Unitech at 8 rupees. He had no idea why he bought it. He bought it because it was cheap and he bought it. And Unitech started going up. And it went up, up and up. Now this guy is really happy because, his 8 rupee has become 190 rupee, but he has not sold it yet. So this profit that he is getting is a virtual profit. It is not a real profit. It is a virtual profit because he has not booked it yet. Please understand this thing very carefully. He has not booked it yet. It is a profit, but it is a profit on paper. All the money that you have right now in your portfolio, if you have a stock in profit, that profit is virtual, because you have not booked it yet. It is a profit on paper. Now, kept on going up, and he's very happy that now right here when it is on peak here, his 8 rupee has become 480 rupees, great money. He thinks he's super rich, but he doesn't do anything about it. He doesn't sell because his greed does not allow him to sell. Then Unitech started coming down. And now what has happened? What was profit started turning into a loss, but he doesn't have the courage to book it. He's hoping that it will go up, and it came down. And now we see this stock is back to 8 rupees. Back to 8 rupees where he had bought. So the fact is, he saw this great profit, but he did not book it. That's why, that profit is not. His current reality is that he is holding it at 8 rupees, and if he doesn't sell it now, it might go further down. So by holding the stock, by buying the stock, you are just buying the uncertainty and the risk of the market. That means but if he would have sold it on top, then it would have been great. He would have booked the profit. What is the worst case scenario? The worst case scenario is most of the people don't buy the bottoms, they buy the tops. Why do they buy the tops? Because they believe the top is a great place to buy, because that is the retail price. Most of us are used to buy the retail price. So he buys the retail price, hoping that it will go further up. Doesn't work on any stop losses or risk management. It starts going down. Now he has lost almost all the money. This is how most of the people enter the stock market. They enter with greed and run away with fear. So here, buying is not a guarantee of profit. When you sell, then you know whether you booked a profit or you booked a loss. What is this a mechanism of? This is the mechanism of any business in the world. You buy the wholesale price, you sell the retail price. So, that's where most of the people, miss out on the stock market. They go into that buy and hold kind of a thing, which doesn't work in most of the cases here. So that's why when you come to the stock market, you have to learn it on the level of a skill. That's important. Is our stock market stocks driven? Now, that's one question, because this is what our market was before 2000. Before the year 2000, our market was stock driven because there was no derivative market. There were only stocks. The dominant exchange was Bombay Stock Exchange. NSE came only in 1993. But after 2000, after the derivative market was introduced and now it has become mature, stocks are no more the driving force of the market. This is another thing worth understanding about this market. For example, this is the daily trading volume on NSE June 26, this Friday, one-day trading volume. Let's see the turnover figures. Equities, number one, your traditional stocks. How many stocks are listed on the NSE? About 2,000. About 2,000 stocks are listed on NSE, and the total traded value on Friday was 14,485 crores in 2,000 stocks combined together. Then in index futures, the most liquid ones are two, Nifty and Bank Nifty. And just in two index futures, the turnover on Friday was 16,127 crores, which is, more than the turnover in 2,000 stocks. Why is that? We will talk about that. Why are more people interested in the index future rather than the stocks? That is something worth understanding. Then if I go to index options, which is only the premium, the turnover was here more than, 16,000 crores. If I'll go into the turnover volume, stock futures, about 150 stock futures are there on the, very good morning, Hamaka. So about 150 stock futures are listed on the National Stock Exchange, plus minus a few here and there. And the turnover in these 150 stock futures was 21,656 crores. almost 1.5 times the turnover in the 2000 stocks. And down here into the currency futures, only 4 currency pairs. The most liquid of them is the USD INR pair. And the turnover in just the 4 currency pairs was about 13,199 crores. Then there is a commodity market traded on the MCX and the NCDX, which has also a huge trading volume. So here, if I look at this, out of the total money that was flowing into the market of about 100,000 crores, only about 15% was flowing into the stocks. 85% of the money is flowing into some other products here. But since most of the people know only stock and they think money can be made only when the price is going up, that's how most of the people are dependent only on the stocks, whether they're doing intraday trading or investing, and mostly dependent only on the up direction of the market. Husband doing intraday trading for the whole day in stocks. 3:30 the market closes, husband comes home, and just by looking at the face of the husband, the wife can tell whether the market went up or the market went down. Why? He does not know how to trade the short side of the market. And that's important to understand, that in this market, now money can be made in both the directions. Let's see this with a real example. Let's go here and open our here. Let's take the last few days of the market. Let me see this move here. We see this move here. This is the move. And this move came in the last 1.5 hours of the market. The move started about 2 o'clock in the afternoon and then finished at about 8,344. So most of the people, the moment they see the market go down, they are scared. They think, now I will only lose money into this market. They only think that you can only lose money into this market when it is going down here. So, but could you have made money into this market? Let's see the same move with an example. This is one of my trades. So here, this is the same move here that I showed you on the chart here. And these are the trades that I was into. I'd bought the put of Nifty, 8,400 put, 8,500 put, 8,350 put. I was short on the future of Tata Steel and I was short on Nifty. And just in this 1.5 hours, most of the money was made into this. The total trading capital was about, a lakh of rupees. And the profit in just this 1.5 hours was 21,062 rupees. This is the total booked profit loss. And this profit was made not when the price was going up, but when the price was going down. And I'm showing you my own trade. This is Yogeshwar Vashishtha. That's my wife's account. So this is the possibility into this market. This is the kind of money that is available into the market if you understand this market in the right context. How many of you are interested in making this kind of money, guys? Say yes if you're interested in making this kind of money. Please say yes. Yes, I want to learn to make this kind of money. Because this is the kind of money that you come to stock market. But then this kind of money will not come just like that to you. Because stock market is a zero-sum game. Please understand, stock market is a zero-sum game. If one person is making money, another person loses money. And this needs to be, drilled down in the head. Stock market is based on difference of opinions. If you want to buy Reliance at 1,000 rupees, because you believe that the price of Reliance will go up, you are bullish on the market. But how about the person who's selling the same stock of Reliance to you? Isn't he bearish on Reliance? He's selling it to you because he believes that the price of Reliance will go down. Because if he doesn't believe that, he will never sell that Reliance to you, will he? No. That's why it is extremely important that you understand that you will be right here and you will also be wrong here. And you need to make money whether you are right or whether you are wrong. And money can be made here into this market in both the direction, understanding both the sides of the market. That's important here. That's what we'll be talking about today. How you can make money with intraday trading, short-term trading, few hours trading. This is a very powerful skill where you can make money, that's there. Well, Mr. Rajkumar says it is not so easy. It is not so easy because you don't know. If I give you aeroplane and say flight, what will you say? Sir, it is not easy. But if I gave that same plane to a pilot, he will, take 200 passengers and take them from one city to another city. Why? Because he has the skill to fly that plane. So it's difficult for you because you don't have the skill. Please understand, whatever thing we don't have the skill, it is difficult for us. And whenever we acquire the skill in the same thing, it becomes very easy. If you don't know how to swim, swimming pool is a dangerous place because you might drown. You do not have the skill to swim. But if you are, trained swimmer, you can jump and enjoy the next 1 hour. Do your exercise because you have the skill. You don't know how to drive a car, sitting in the car is terror. But if you are an expert driver, you can enjoy your drive. A doctor, classical example of a skill, a doctor requires about 5 years to have the necessary skill of doing open heart surgery. In fact, in the first 1 year, he has all the theoretical knowledge to convince others that he knows about open heart surgery. But in the first 1 year, the medical college does not give him live bodies to experiment with. Because they know without skill, if they give him live bodies to experiment with, he will convert them into a dead body. Because he doesn't have the necessary skill. And it is the same in the stock market. If you don't have the skill, you will lose money. And if, you don't know, then you will lose money. What is the percentage of people who make money here? And what is the percentage of people who lose money? Roughly about 20% of the people make money into the stock market and about 80% of the people lose money. So ask yourself, which category do I want to be? These 20% are the people who take it on the level of the skill. They work hard, they train, they study their stocks, they go into fundamentals, they go into technicals, they use their stop losses, they book their profits. And the remaining 80%, they are dependent on somebody else, on tips, on brokers, giving money to somebody hoping they will manage their money for them. So take it on the level of a skill. What is the definition of skill? Skill is, transfer of knowledge from conscious mind to subconscious mind by practice, and practice. That is a skill. So we learn to catch the market swings, how you can build and manage your own portfolio. When you retire, you'll require about 1 crore of rupees. That's the minimum if you want to have a good retirement. So do you have a plan to have that 1 crore of rupees at least, if not more? And if you don't have, then how will you have, money for your old age? So 2 places money grows the most. One is real estate, one is stock market. Unfortunately, real estate cannot be bought and sold in parts. You cannot go to the builder and say, oh, give me just one kitchen this time, my bedroom I'll buy next year. No, you can't. But in a stock, you can do that. You can buy it in parts and you can sell it in parts. So you can buy it in parts and you can sell it in parts, and you can use to make your own portfolio when you are coming here into this one. So we'll learn how you can, and not by giving money to anybody, by just looking at it and, working and making your own portfolio. So you can make your own portfolio. That's another thing that is very important to understand into this market. Then, how to trade leverage assets. When I was trading option now, option is a leverage asset. And, if you are able to trade the leverage assets, then you can make money. And most important, how to make money when the price is going down. All kind of possibilities are there. Then most of the money is into the stocks that you haven't heard the name. How many of you have heard the name Kitex Garment? Let me show you the chart. Now you will like it. Let me go here and go to a stock called Kitex Garment. And look at this stock. In just the last about a year, it has gone from 100 rupees to 966 rupees. And what do most of the people come to the market for? So if I make 15-20% a year, I'll be very happy. In any case, I make about 9% from my FD. If I make double of that, that would be great for me. Why not come here for this kind of money? But then you have to identify and find stocks like this. Don't buy it now. Now the move is gone. You have to learn how to buy the wholesale price and how to sell the retail price, because it doesn't always go up. It can come down also. Let's take another example. Now, this is also a company maybe known to you. This is RS Software, backbone of Visa. Rose from 70 rupees to 400 rupees, then came down from 400 rupees to 145 rupees, now started going up a little here. So you have to learn how to catch it here, how to sell it here, and in the futures and options segment, in the derivative segment, how to make money when the price goes down. So you can make money in all the directions, and that's why it's very important to learn it on the level of that skill, guys. My name is Yogeshwar Vashishtha, guys. I'm a civil engineer by profession. I've done my from IIT, my international certification in management from South America, Peru, and my advanced courses in trading from Pristine Academy of USA and Online Trading Academy of USA. I'm a professional trader and a trading coach. This is what I do for a living, and it's a brilliant career to go into. I'm not from a trading background. My father is a scientist, now retired, and he told me to just go and get some great education. That's what I did. I did my M.Tech from IIT. Then I was a scientist for a few years. Then I went out of India. Then I used to work for an international company called Skanska. While I was working for, I built hydropower projects in a few countries. I was in Sri Lanka, in South America, in Peru, in Sweden, in Europe. And while I was in Sri Lanka working on the Kukuleganga hydropower project, that's where I came in touch with a Swedish trader. That's how I got interest into this profession. And then from Sri Lanka, where I learned from him, I was transferred to South America. While I was there, I had the opportunity to learn from Pristine Academy of USA. This was a great learning for me. I started trading the market with good results, and started with stocks, then went into the derivatives, then options, then forex, and I started getting a hang of it. And in 2007, I was supposed to be transferred to Scotland. Decided to come back and give a full try to this career. Luckily, I had a backup of savings and my first career. So came back to India in about February 2007. We had a roaring bull market at this time here. This is 2007, a roaring bull market. So this was easy. Came back and became a trader with my family. So 2007, you could have made money with very simple moving average crossovers. So it was pretty easy market to trade. Then came 2008, our market crashed. Luckily, I was trained in the short side of the market. I could buy my puts, I could short my futures, and I could make good money in 2008 while the market was going down. Then 2009, the market went up. I could again make money. And in these 3 years, I had seen a bull market, a bear market, and again a bull market. And since I could survive all three, so I said, this is a great profession to be. You can make money in both the directions. And that's how, I started enjoying it. I thought this is what I will do now for the rest of my life. And I became a professional trader. And slowly I started coaching my students, mentoring students. I'm from Mumbai. And within a year or so, in 2009, 2010, I taught about 2,000 people. Then in 2010, an international company came to India, and they are looking for some consultants. I saw it a great opportunity to, enhance my skills by getting associated with international traders. So from 2010 until the mid of 2000, I was part of this international group of traders. I used to travel all over India and take introductory workshops where I train maybe about 20,000 people in various cities and in Mumbai. And one thing I learned is that a lot of people are interested into this market, but most people have no idea what to do here. People had absolutely no idea of the derivative market, short side of the market, and most people confuse trading with investing. So, about 1.5 years here, and that was a great learning experience for me. And I started toying with the idea of creating a mentoring model of my own. I do training since 2007. So in 2012, August, I left that group, came back to Mumbai, and started working on a mentoring model of my own. And in December 2012, I started my own mentoring model, more affordable, more nice, covering all the aspects of the market, the derivative market and the stock markets, commodities and the forex. And since then, in the last 2.5 years, in introductories like this, in physical classrooms and online trainings, more than 5,000 people have been trained. And in the main workshops, the mentoring workshops, which are of 6 months duration with lifetime of mentoring, more than 1,000 students have passed out. And we have online trading rooms and physical trading rooms where people sit and practice their trading skills here. And it's a great profession to be in if you come and learn it properly. It's a myth that it is gambling. Any economy of the world, stock market is a barometer of the economy of the country. No gambling then is the barometer of the economy of the country. It is the stock market which is the barometer of the economy of the country. And every time you put your 10,000 rupees into a stock, you are giving money for the development of the country. That's how important participation in our stock market. In fact, at this moment, the participation of our own public in the market is very less. Most of our market is controlled by outsiders, FIIs. But in the last 2-3 years, situation is changing, and now we have more and more people who are interested, who want to be part of this market, and who want to ride the rallies and upside and downsides. It's a myth that you can only trade the news. It is a skill. There are good stocks, there are bad stocks, there is upside, there is downside, and the key is to make money in both the directions. Then many people believe I don't have to take any formal trading education. I just come here and I buy, and I'll become rich, which is not the case. You have to train yourself like in any other field. This field also requires your active participation. And if you can do that, there is a lot of money into this market. And the biggest myth is others will make you rich. Nobody will make you rich. You yourself have to develop the necessary skills to become rich. This is one other myth, big myth. It's called the investment myth, where most people believe who are not trained that over a long period of time, everything goes up. I just have to buy some nice, good blue chip companies, hold them over a long period of time, because over a period of time, everything goes up. I wish that was true. This is not true. You just can't buy and hold randomly because the result can be disaster. Let's have a look. This is our market in the last decade. Since 2002, we are into a structured bull run. Nifty has gone up from 1,000 to about 8,400 now. That is the current price of Nifty, and it has grown about 8 times. So with this logic, every stock should have been up. No stock should be down. Every blue chip, every large cap, everything should be up. Logically, if that is the logic, let's see if that is true. In this same time, we have a Suzlon, large cap, wind energy, giant in that field, and its price has come down from 490 rupees down to about 22 rupees. It has gone down. It has not gone up. It has gone down. Then in the same period, Thermax has gone up from 100 rupees to about 947 rupees. This has gone up. Big name Reliance, it has not gone up at all. In the last 7 years, from about 1700 rupees, it is down to about 1000 rupees now. It has not gone up. So why is one going up? Why is another going down? Depends on the performance. Mind you, every stock is a business, and every business has to give performance for in order to go up. If it performs, it will go up. If it doesn't perform, it will go down. But it is not even as simple as that, because in the market you do not trade the the book values or the earnings per share, what you see on the balance sheets. In the market, you trade the market price, and the market price is purely driven by the fear and the greed. And you not only have to understand the fundamentals, you also have to understand at this moment whether there is a fear or whether there is a greed. And accordingly, in short term, the price would be driven by fear and greed, and in the long term, it would be driven by the performance of the company's business. So let's look. Yes, the same period has rallied up, but RCOM has gone down. Now, this is good to see now. Abhi, everything is good in perspective. But go back 10 years, then how will you know whether to invest in a RCOM or whether to invest in a idea? Because then, at that time, the future has not come. Please understand, your money in this market is made only in the future that has not yet come. And your job is to make a reasonable analysis of the future as it is going to happen. And that's why, it requires that level of skill. The good news is it is a skill that can be learned, because human being behaves the same way in similar situations. Company's price behaves the same way in similar situations. And if you can learn that and understand that, you all can make money consistently into this market here. Now, this is DLF, which has gone down, but NBCC has gone up. Kingfisher will never fly again, but ACC is up. BHEL is down in the same bull market, but Siemens is up. Tata Steel is down, and some of you who are on slow connections, you might not be hearing me properly, because you require at least 2 Mbps for a smooth hearing. But I'll be sending you a recording of this session. Each and every one of you will receive a recording of the session. So don't worry if you miss anything, you will get a recording of it. So here, Tata Steel is down. Why is Tata Steel down? Tata Steel is down because, it is a lousy company in terms of fundamentals. It is continuously making losses. Its P is exorbitant. Its PEG ratios are negative and hugely negative. So that's why it is more or less in the long term going towards the fundamentals, which are extremely weak. In the short term, the market is driven by technicals, and in the long term, this market is driven by fundamentals. And you have to develop the necessary skills to analyze the fundamentals and the technicals, and using the necessary risk management when you are not able to understand it. Kalyani Steel is up. JP Associates from 350 rupees down to 12 rupees. But L&T is up. Unitech is down. But Prestige Estates is up. Financial Technology is down. But TCS is up. So you see, I'm giving you the picture. How will you know 10 years? Abhi, mujhe aap ye bataiye, right now, shouldn't you have the skill to find out 5 years from now which stock will go up and which stock will go down? And most of the stocks that you want in your portfolio probably are the stocks whose names you don't even know right now. And in intraday and swings, you need to be very good with your derivative market if you need to understand. That's why it is not an investment. You are all traders. Whether short term or long term, whether you're doing intraday trading or investment, you're all traders. It's a skill. So if you buy in the morning and you sell by evening, you are an intraday trader. If you hold your trade for about 10 days and then exit, you are a swing trader. If you hold your trades for a few months, then you are a positional trader. And if you hold your trade from months to years, you're a long-term trader. But each and every one of you is a trader, because you will book your profit or a loss only when you sell. Holding is no guarantee of profits. So the intraday and swing styles of trading, these are income styles of trading, where you can create incomes on day-to-day basis. And positional trading and long-term trading are wealth building styles of trading, where you can build long-term wealth by going into the stocks. And a good trader should practice all four, should be practicing all four. Another thing that happens in the market is that you need to understand that in this market, you're always subject to risk. You're always subject to risk. Let's take anything. For example, if I take this particular stock, let's take this stock itself. This is RS Software, which I'm seeing now. Just looking at this is a technical chart of RS Software. This is a candlestick chart. Just looking at here, I see that the RS Software bounced up from an accumulation zone, made a flag, and now forming a continuation pattern, which is wedge. It is having a lower highs and higher lows, and if it breaks above the wedge, it will go up to fill the noise gap. Once it fills the noise gap, it will go and move into the distribution zone at about 240. Now, for most of you, this is all jargon that I've just talked. But it is this jargon that you will have to learn, because every profession has a language. I just talked in a language called technical analysis. The way doctors have a medical knowledge, medical language, a chartered accountant has got a financial knowledge, a sportsman has got sports vocabulary. Similarly, here, to become successful into this market, you need to understand the vocabulary, the language of this market. And the language of this market is technical analysis, fundamental analysis, risk management, and psychology of trading here. So here, just looking at this now, let me go into the layman's language. Let's understand the possibilities here. Let's see, let me go here into this market now. Let's see, I draw an accumulation zone here. I've drawn an accumulation zone, and I see that price tried to break this zone and started moving up from this level here. Now, if I look at this price here, and I say I want to buy RS Software because fundamentals are good, I think it is beaten down now, it might reverse from here, whatever your reason might be. So you go here, at this price, you buy RS Software. You buy RS Software. The moment you buy RS Software here, you have bought uncertainty, because tomorrow RS Software may go up, RS Software may go down, the company might close down, it might become 120, whatever. So the moment you buy, you have given your money to the market and say, jo karna hai karo, whatever you want to do with my money now. So you have taken unlimited risk by entering the stock. So the first job of a trader is to change your unlimited risk into a limited risk. In this market, the only thing in your hand is your loss. Profit is never in your hand. Loss is always in your hand. So people who can manage their losses will eventually get profits from this market. So I say, if I, right now, I'm into this possibility of big profits and big losses. I don't want to have a big loss. I don't mind having a big profit, but I don't want to have a big loss. So I put an order here called a stop loss order. And I say this is where the price was rejected. And if it goes below this, then it might go further down I don't want to be wrong for more than this. So I have converted now my unlimited loss, my big loss, into a small loss, a limited loss. Now, I might be wrong, I might be right, but I'm sure I'll never have a big loss. I'll only have a small loss. And I see that my target is maybe the high from which where it started dropping down. So let's say this becomes my target here. This is my target in the market here of this stock here. So I've just now agreed that I will not have a big loss. That is my target. So my reward to risk, this is my risk here, and this is my potential reward. This is my potential reward, and this is my risk. This is my maximum risk. Now, risk I have defined. This is my maximum risk. I will not take risk more than this. This is my maximum risk, and that is my potential reward. And I start moving into this. So my reward is much bigger than my risk. So mathematics is on my side. My potential reward is 1, 2, 3, 4, 5 times bigger than my potential risk. That means, what does it mean? You are having a 5:1 trade. If you're right, you will make 5 times more than if you are wrong. So let's say, even if you are wrong 50% of the time, 5 times that you are wrong, you will lose a percent each. So you lose 5%. But the remaining 5 times in which you are right, you will make 5% each, you will make 25%. So even though you are wrong 50% of the time, and you take only this kind of trade, and each one of them either achieves the target or hits your stop loss, you will make a 20% that month. By being right only 50%. This is what trading is. Trading is not about being right. This is the biggest crap that has been given to you. That trading is about being right. It has nothing to do with being right. If you're right, that's great. But trading is, what do you do when you are wrong? It is what you do when you are wrong which decides whether you will become a successful trader and investor, or you will become an unsuccessful trader and investor. The best of the traders I know, they do not have a success rate of more than 70%. 70% is brilliant into this market. Even a 60% is fine, provided you know how to do risk management. Now let's go further into this trade. This is now next day. Price. Now price has gone up. Now the price has moved up. And now I move my stop loss from here to here now, to this price now. Now, what is this? Now, this one is my guaranteed profit. Now, I will never have a loss into this trade because I have trailed my stop loss into the zone of profit. Now, I have two kind of profits here. One is guaranteed profit and other is virtual profit. As this keeps on moving up, my fixed profits will keep on increasing. And it's so your job as a trader is to get out of negative risk as fast as possible and go into the zone of positive risk as fast. Is this clear to everybody? Isko samajh dala to stock market jhe lala. That's what I always say. So it's about risk management. Trading is not about being right. Trading is about how do you manage your wrongs and how do you manage your losses. And that's how you convert your small profits into big profits, but then your small losses never become big losses. So we come into the enough, you have to learn proper risk management, technical analysis, fundamental analysis. The facts of the trading are, with practice, anybody can become a trader. It is an acquired skill. It's a business like any other business. It's risk management, and trading gives incomes. And you have to work hard for it, the way you work hard for anything else. But then the money here is so much that once you develop this skill, You don't have to do anything else. There's enough money here in this for everybody. So don't remain a dependent investor. Become a independent trader. That's important. These are the 4 types of trading: intraday, swing, position, and long term. And you should be learning all 4 styles of trading. What are the products you can trade? The number 1 product is stocks. Stocks are mostly used for positional trading and portfolio building. Stocks have a disadvantage. What is the disadvantage in stocks? The disadvantage in stocks is that you can make money only when the price is going up. Since you are partner in a company when you buy a stock, so you are partners in profit and losses, and you can make money only when the price is going up. That's why it's very important that you get out when the price starts going down. Otherwise, you will suffer a loss. So in trading stocks or investing in stocks, you have to take care that your entries and exits are very good. Because if your entries and exits are not good, then you will have a problem. Even in big stocks, let's see here. Let's take any stock. Let's take a pharma stock, let's say like a Wockhardt Pharma. If I take a stock like Wockhardt Pharma, you see this is Wockhardt Pharma. Wockhardt Pharma was going up. You had bought Wockhardt Pharma, let's say at this price. You had 1655, you had bought Wockhardt Pharma. It is going up. You're very happy. Then Wockhardt Pharma started coming down. You didn't do anything about it. And you see now what has happened? Your profit had turned into a loss. You saw a profit here. It's not that you didn't see it. Your Wockhardt Pharma went up from 1652 to 2000, but you didn't do anything about it. So it came down from 2000 back to 1426. But imagine if you would have known how to exit here, you would again get an opportunity to buy it at a much lower level, and then you again catch the uptrend. So when you are trading stocks, you have to learn how to catch the uptrends. And for that, you have to be very good with your technical analysis. Technical analysis is the language of these markets. It is a language of charts. It is a pictorial language. It is like the ECG of a doctor. But once you understand this language will tell you the directions, and this language will tell you the momentum. Please understand, before the direction changed, it is always the momentum that changes. For example, I had a few studies into this. Let's say I add into this Bollinger Band, telling me when the volatility has started changing, when the trends have started changing. And I also add into this a momentum indicator. Now, this momentum, what is a momentum indicator? A momentum indicator tells you when the direction is about to change. It has not changed yet, but it will tell you when the direction is about to change from top to bottom or from bottom to top. Logic is very simple. Before the direction changes, the speed changes, the momentum changes. You're driving a car, and driving that car, you are, you want to turn from 100 meters ahead. Your direction will change after 100 meters, but your speed will start changing now. You will go from the 4th gear to the third to the second, from 80 to 60 to 40. And before you turn, your momentum would have significantly changed. And that's what exactly happens into this market. These charts are made by the big players. You and me are not important. The big players are important. It are they who are trading with each other. We are the customers of them. So they sell their stuff to us. So you have to understand when are they buying and when are they selling. If you can understand that, then you will exactly know where to enter and where to exit. That's why you have to be very proficient in this language called technical analysis here. So you can trade stocks. Then another product that you can trade is stock futures. Now, stock future is a directional discounted product. It is an income product. And to, trade a stock future, you don't need full money. You pay only about 20% of the money, and you can control the full number of stocks. And not only that, in a stock future, you can make money in both the directions. For example, yesterday, let's say we had GAIL that went down 3%. Bharti Airtel went down 2%. So if I look at GAIL, you would think, okay, yes, I would only, I could have only lost money because GAIL went from about 420 on Thursday to 399. About 20 rupees it went down. So in a stock, you would have lost this money, about 5% you will have lost in the stock. But in the future, you can go to GAIL. I go into derivative market. And in the derivative market, I choose a near expiry future of GAIL and put it here. Now, this has got a lot size of 1000. I open this one now. And here at this point on top, I could have chosen to go short on GAIL. When it started going down, I could have chosen to go short GAIL. Money required about 50,000 rupees, not full money. Short GAIL, I have shorted GAIL here at this point here. Then I put my stop loss right on top here to save myself if I'm wrong. I put my stop loss here. This is the maximum risk I've taken, about 3,000 rupees. 3,000 rupees is my maximum risk. And with my methods that I know and I teach to others, I keep on trading GAIL as it is going down. And by the end of the day, I sell GAIL at 395. So this one here, this is a profit of rupees from 411 to 395. That is 395, 405 and 4015. So this is a profit of 16,000 rupees. So when it was going down, not when it was going up. If you were into the stock of GAIL, you would have lost 5%. But if you were trading the future of GAIL, you would have actually made a profit of 16,000 rupees. This is the power of a stock future. And this move from here to here is a move of about 25,000 rupees. So in the last 2 days in GAIL, this is a profit of 25,000 rupees and this is a profit of about 16,000 rupees. So total profit of 40,000 rupees was there potentially in GAIL by trading the stock futures just on Thursday and Friday, guys. That's why stock futures are very powerful and very, very, that's why money flows into them because they're bi-directional products. You can trade index futures, you can trade a Nifty, you can trade a bank Nifty. And they require only 10% of your potential. If you catch 1% move, your profit grows by 10%. If you catch a 10% move, your money has become double. That's why there's more money flowing into them. We saw in the chart, there is more money flowing into the index futures than it is flowing into the 2000 stocks combined together because they are 90% discounted bi-directional products. Then you can trade options. What a product. An option can, let's look at that option here that I was showing you here. Or why not look at this one? Now this is GAIL. And if you're trading an option of GAIL on this day, let's say you are trading the 400 put here. On the same time, I go to GAIL and I go to puts of GAIL, 400 put. Let's say what happened to the 400 put in the last 2 days in GAIL. And this is what happened. In last 2 days in GAIL, if you had bought GAIL in options, you would have bought it at about 8 rupees and 50 paisa roughly. And on Friday, it was at about 15 rupees 85 paisa. Your money would have become doubled in 2 days. In just 2 days, your money would have become double here. And if you are trading the call option, 8,400 call, let's say this is a 400 call. See, in this time here, from here to here in a single day, when the price was going up, you would have bought it at 8 rupees and by evening you would have sold it at about 19 rupees. We are talking of doubling your money in a day. And the best thing in options is, worst case scenario, you can't have unlimited loss here. Your loss would always be limited to the premium that you have paid. This is a product in which you always have limited loss with the potential of unlimited profit. That's why it's one of the most popular products into the market, one of the cheapest products you can go for. Then you can trade commodities. What a market, amazing market. And commodities is, this is a market that opens at 10 in the morning. It is open till 11:30 in the night. Even if you're doing a job in the evening, you have enough time to trade your commodities. And this is a market that is discounted by about, the kind of money you can make in commodities. Let me show you a trade here. Let's take a crude oil trade. Now, this is a trade that I took in one of my classes. So here, now this is a simple, noise gap filling trade in commodity in crude oil. And the trade started in the evening, somewhere around 6 o'clock around. And the move started around 2 o'clock, 3 o'clock. Then in the evening was a maximum liquidity. It went up. Trading capital about 30,000 rupees. And in just a few hours, the booked profit loss, as you can see here, was 10,404 rupees. I'm talking of a 30% return in just a few hours, by trading the crude oil. You can trade copper, you can trade gold, you can trade silver, jeera, dhania, wheat, potatoes. In fact, this is a market which is a much bigger market, and this is a market which are very, very liquid market. So you can trade commodities. You can also trade futures now. Forex futures, USD INR pair is very, very popular. And derivative market is a cheap market and a bi-directional market here. But to trade or invest, you should know what to buy, when to buy, how much risk to take, and when to get out. What to buy is important because you do not have unlimited money. You have limited money and the market has unlimited opportunities. So you need to put your money only on the high probability opportunities for which you require skill. When to buy, you need to time your market. You need to be brilliant with your technical analysis and your chart, because only they will help you to time the market, not a TV or a newspaper or a tip. You need to take the control in your own hands. Trading is the journey of moving from dependency to becoming independent, not being dependent on anybody else to make your money. How much to buy, position sizing, the right risk to take, and when to get out. When you know these 5 things, then you can become a trader. And to know these 5 things, you need to have the necessary skill set. What is the skill set? You need to know fundamental analysis to do your stock selection. You need to know chart reading, technical analysis to time your market. Timing the market is very, very important. You need to know stock filtering to find high probability trades. Just out of 5,000 stocks, how to find those 2 or 3 stocks today for my intraday trading, 2-3 stocks for my portfolio building, and the stocks for my, you can do filtering based on technical analysis. You can do filtering based on risk management, based on, fundamental analysis. You need to be brilliant with your risk management method. In fact, the whole stock market is nothing but risk management. Then you should know how to master the online platforms now. Now, online platforms are great. Those days are gone when you had to sit in front of the computer or call dealers to execute your trades. Now your trades can be executed automatically. In my system, I put my trades in the night based on my levels. And then in the morning, whether I'm near the market or not, whenever my level will come, the system will buy it for me, put my stop loss where I've instructed it, trail it when it starts moving in my direction, and will book profit when my target is achieved, whether in intraday or in 10 days or in a month or in 3 months. So this is why you need to master your online platforms, not be dependent on your broker or your dealer anymore. Then you need to know high probability trading techniques. This market is either uptrending, downtrending or sideways trending. In sideways trending also, there is a flat sideways and there is a volatile sideways. And there are different kind of trading techniques for different kind of markets, which you need to, understand and practice. You need to have a trading plan aligned to your personality. This is a business. The way you will not go do a business without a business plan, you should not enter trading and investing without a trading plan. Then you should be proficient in rational decision making. Money management and trade management is an integral part of handling your money. What is trading? Trading is the optimum utilization of your capital. And how to manage your emotions and your subconscious mind. These are 10 skill sets if you acquire. Then each and every one of you in this class can become a trader and investor. You can create short-term incomes and you can also, create long-term portfolios, and with the grace of God, a portfolio more than ₹1 crore when you retire. That is what you can do if you have these 10 critical components of trading as your skill set. Let me tell you about Pathfinder's mentoring programs, friends. In Pathfinders, we do a 6 months of training and a lifetime of mentoring. It's a practical trading where the emphasis is more on practice. We have live trading days and we trade real money. I teach in this to you all the asset classes: stocks, stock futures, index futures, options, commodity, and forex, and all the styles of trading: intraday, swing, positional, and long term. The typical batch size is about 20 to 25 people. The trainings are physical trainings in Mumbai and also online trainings that people can attend who are unable to come into the physical trainings. And, the emphasis is on creating the skill. So these are the batches that have passed out in the last 2 years, in our batches that have been held in Mumbai. In Mumbai, the classes are held in Thane and in Andheri, and online you can attend from anywhere. So all kind of people come into our classes: young, old, ladies, gents, financial, non-financial. I start from absolute zero. I assume when you come into the class that you know nothing, and start from the very basic, but then take you to the very advanced level. So from the very basic to the very advanced level is where I take you. These are the batches that have passed out. These are the course contents. It's all available on website, guys. Website is pathfindertrainings.com, written down. So this is the course is practical, where emphasis is on fundamentals, technicals, risk management, psychology, and all the methods that are used to make money. I have enclosed into them, but practical aspects. And I do live trading in my classes. In my classes, I'll do live trading with real money. That is there. So, and in these classes, the format is such a way that first I demonstrate and then you will trade with me. Let me show you the format of the class. First, there is 4 days of classroom training for the on location courses, 4 days of classroom training. And the only difference between the online training and the classroom training is that in the classroom training, there is 4 days of classroom training, while in online training, the first 2 days are a recording session of this training that I send you. Rest remains exactly the same for 6 months. So first 4 days of classroom training, it will always be Saturday, Sunday, Monday, and Tuesday. Saturday, Sunday, I take the concepts, teach you the methods, the techniques, the high probability methods. Then on Monday, Tuesday, whatever I have taught you, I will trade in front of you with real money, my money. I'll be trading stocks in front of you, futures in front of you, options, commodity, forex, everything I'll trade in front of you, and you will watch me trading. That will give you the confidence that this is how money can be made. Then you will prepare a trading plan under my guidance, and this would be individual to all of you. So I'll be giving you a trading plan format. You will be trading some psychometric testing, and then you will be preparing your trading plan. Then your online training will start the way it's doing now, very interactive. The same way, those who are from Chennai, you can attend online training. I'll be just telling you. But there are people who come from Chennai and Hyderabad and attend my courses in Mumbai. So it depends on you. Look at your convenience. You can either attend online or you can attend physical. So then after 4 days of training, there is 6 months of online training. And this online training is every Thursday night from 9 o'clock to 11 o'clock, which is the lesson day, and it's interactive. The way it is now, you're listening to me, same platform I use. And these trainings, I tell you the advanced concepts. At that time, the commodity market is open. We are able to take a lot of live examples. I've kept them in the night so your job is not disturbed. And all the online trainings are recorded. That means if you have missed it by any reason or you want to repeat it, you can listen to it many times. So the online trainings are recorded and the recording links are sent to you within 24 hours so that you can repeat it if you want to listen to it again, or if you have missed it, you can listen to it. So 6 months of online training. Then every month there is a trading test, and I do it on the last Thursday of the month, which is expiry. That is considered the most dangerous day of the month, the expiry day. So I do, monthly trading practice on the expiry day. And in the monthly trading practice, you will be trading with me. The first 4 days, I am trading, you are watching. But as your skill is developed, you will be trading with me. And every month, last Thursday of the day, from 11:30 in the morning till 3:30 in the evening is a trading practice session. This is also online. And in this, you trade with me. In the 6 months, you will get 6 trading practice sessions in which you can test your skills. And these trading sessions are guided, where I tell you what to buy, where to put your stop loss, how to make a channel, how to make a Bollinger, how to analyze the stocks. So this is an important one. So every month you get a practice. Then for people who want to have me as their mentor, there is a lifetime of mentoring for Pathfinders, active traders, which is from 11 to 12 in the morning. Every morning from, every Tuesday from 11 to 12, once a week, there is a mentoring session, which is taken by me. In this, I guide you about the market the coming week, tell you about the stocks that are worth buying or selling. And I also share into this the, trades that I am doing, that I'm going into. So this is mentoring session that happens every week. And you can also ask your queries in this session. You want to buy a stock, you're analyzing something, you want to buy an option, you want to enter crude oil or a commodity. So you can put your query here. So this is a stock, can you please analyze it for me? And we'll be more than happy to analyze the stock for you. And this lifetime mentoring happens every Tuesday, and that is for life. So how much capital is required in life? You can start with very small. In the start, if you want, you can even watch me. That's up to you. And gradually, as you get the skill, then you can increase your capital. But in the start, very less is quite okay. So this is a training format, guys. First 4 days of classroom training, which happens in the classroom. For people who will do the online course, they will get a 2 days of recorded session. The same 2 days that happens here, first 2 days, they will get a recorded session. Then 6 months of online training, which is online. Monthly trading practice is online. Weekly mentoring sessions happens online. If you want, you can come and meet me in my office in Thane in Mumbai with an appointment. And there is a lifetime mentoring for Pathfinders active traders, which is also online. So this is the format of the training, guys. So for people who later on want to become serious traders, we have got physical and online trading rooms that you can join, in which there is a training every day, and also high probability trades are given to the trader. So mentoring model, friends. So after the training, what can you do? After the training, these are the takeaways from the training. You can make money with intraday trading. You can catch moves with swing trading. You can build and manage your own portfolio. Take the first step towards building that 1 crore portfolio. You can trade leverage assets like options. Okay, somebody asked, by online class, can I participate at 4 days training? No, sir. 4 days training, you will have to attend physically. And online training, a recording is sent to you for the first 2 days. So you can make money when price goes down, and you can also earn 25 to 100% per year on your capital by developing the necessary skill. This is what you can do after the training. This is all it costs in the cost of the training. 26,000 rupees plus service tax, for the physical training, 6 months training plus lifetime of mentoring. And for online training, it is 20,000 rupees plus service tax. So 26,000 rupees plus service tax comes to 29,000 something. And 20,000 rupees plus service tax comes to about 22,800. So this includes everything, your notes, your mentoring, your sessions, your lifetime of mentoring. So everything is included into this, guys. This is, these are the upcoming trainings. We do trainings so these are the schedules. You can note them down. Next Saturday, the online training is starting from 4th of July. On 11th of July, the training is starting in Thane, Mumbai. On 15th of August, the training is starting in Andheri, Mumbai. So these are the 3 trainings that are starting. You can join any of them. So, and you can pay any way you want on this. You can pay by cash, by check, by credit card, and you can go on a website and do the payment, or somebody can contact you and do the payment. You don't have to pay me now. Later on, you pay me. But, those who want to take their trading to the next level and who want to participate into this, if you just say yes, I would know that you are interested into these classes. So, and then somebody will contact you and give you the details. So those who want to attend the classes, either physical or online, can you just say yes? Saying a yes is good enough for me that you are interested into these classes. And then, somebody will contact you, and later on you can ask your queries from the Vashishtha or education manager. So just say yes if you want to do the training, and you will be contacted back. Okay, great. I'm getting a lot of yeses here. Great to see that. It's a great profession. And you see here, we spend this kind of money on buying a mobile phone or a TV or a fridge, which are all perishables. And one thing my father taught me is that once you get the knowledge, then that never goes away. In fact, money grows the most in your mind. And I'm an engineer who knew nothing about the stock market. And here I am, with the grace of God, I'm able to tell you something so that your trading journey can be enhanced. And that's what it is. In our country, very few people have knowledge of this trading. So why not learn it and, and then pass it on maybe to somebody else. Teach it to your wife, teach it to your kids, and then you can go for it. Okay, let me take some queries. Some people have questions. Okay. Let's take some queries. Most of you have, those who say yes, I'll put the name. A lot of people have said yes. Amit has a question. Can I do trading full time? Yes, with experience, what I have seen is that out of the total number of traders that I've taught, it must be more than 3,000 so far. Almost about 20% of them eventually take it as a full-time profession, and about 80% take it as a part-time profession. So if you feel you're interested enough and you want to do it full-time, well, why not? Go ahead. It is a full-time. I do it full-time. So can you. In fact, there's a whole breed of traders that are coming in India now who want to have, look at this business. What a business. This is a business of freedom. You don't have to open any office. You don't have to hire any employee. You don't have to give any service to anybody. You're absolutely, totally on your own. And what I would suggest in the start is, do it part-time. Don't do it full-time in the start. For a few years, do it part-time while doing your job or your business. And later on, once you feel you have the skill, when would I suggest that? When you start making more money from this than you make from your job. Because your job supports you. You can't just leave it like that. So, once you are, a profession, then you can think whether you want to take it as part-time. In the start as part-time, then when you have the skill, you can take it full-time. Now, another question from her, she said, I'm a student. Well, great, you're a student. You've done all these studies. And what is it for? It's basically for a job. What will the job give you? Money. What am I teaching you? Direct route of money. Understand, whatever job you do, and you make money, you require 20 years to acquire that skill. You went to a school, you went to a college, you did a specialization, then you got a training and everything, and then eventually you went into it. So here also have the patience to learn, and then you can go and take it as a full-time profession. Take it part-time. Target about 2 to 5% a month first, and then gradually as you go forward, target about 10% a month, and then you can take it forward. So the way you develop in other fields, you also develop in this field. Okay, another thing somebody said, will you send me a link of today's session? Yes, I will. Because I understand that there's some people who are on weak internet connections. They don't tell me, thank you for your good manners. But some people are on weak connections. So I will send a recording so that if you want to listen to it again, there might be some concept जो पूरा समझ में नहीं है, आप एक बार और सुनना चाहेंगे. So I'll send you a recording. You can listen to it as many times as you want. But recording, I'll send whenever I get time, either today or on Monday. Any other question or queries, guys, before I finish the session? Those who want to attend, if anybody is missing, just say yes. Only those who say yes, I will pass on the name to my education director, and she will be calling you. Okay, Mr. Naidu said, do we get full training if I go to? Yes, sir. In online trainings also, you get the full training, everything. The only reason I have a differential cost because I don't have a hotel cost in that. That's why I can give you some discounts on that. But the training is exactly the same. Whether you attended physical or you attended online, it is exactly the same. Plus, after the training, my number is given to you. You can talk to me directly. It's a mentoring model. It is not a training model. You can talk to me directly. And if you have any queries, you can discuss them with me. Okay, now we have Mr. Selvam from Chennai asking, will you teach full-fledged intraday trading or long time? I'll teach both, sir. I can, I'll teach you both. That's the main thing. You should be knowing how to do intraday trading, but you should also know how to build portfolios. Please understand, stock market is fractal. Whatever is applicable in short term is also applicable in the long term. You just have to do the necessary course corrections. I'll be teaching you both. Okay, now a question of persons, can I attend from abroad? Yes, in fact, many of my students are from abroad, from USA, from Dubai, from Australia, I have one or two. So you can attend it from anywhere here. Installments, no guys, we don't give installments. Mr. Rajkumar asks installments. No, sir, no installments. It's full payment before the course. My course is very, very reasonable. I have tried to keep it as reasonable as I can. Okay, any other queries, guys? Or else I'll wrap up today's session. Okay, then on the one question, what about future and options? We will fully train. Yes, you will get fully trained in futures and options. In fact, I trade a lot of futures into the classes. I trade a lot of Nifty futures and stock futures. And I also tell you about the options, how you will trade the options. In fact, futures and options is a very, very important part of the workshop. You use stocks to build portfolios, and you use futures and options to, create incomes on a day-to-day basis from the market. Okay, somebody asked me, do you have any personal holy? No, I don't have a holy grail. I don't have a method by which I make money all the time. It is a skill. It is like driving a car. A person who knows how to drive a car, you give him any car and he will take it somewhere. The one who doesn't know, you give him any car and he'll bang it. There is no holy grail. Stop looking for holy grail. Stop looking for softwares that make money. Stop looking for shortcuts in making money here. Very frankly, my friends, they do not exist. But if you are ready to work hard here, you can double your money every year into this market. At least that is what I can say with experience. It takes you towards financial freedom very, very fast. Okay, guys, please note the numbers of Dharmishtha. Those who want to contact her, don't call her today. You can call her on Monday. She's not available today. So she's the education director. So this is her number, 9022330009. You can call her on Monday. And those who have said yes, she will call you personally. And you can ask her about any queries that you have. Okay, guys, thank you very much. Thanks for attending the workshop, making it a great success. I wish I could add some value in the 2 hours of your life. And I wish you success, peace, happiness, prosperity in whatever you do in your life. And many of you who have said yes, I look forward to meet you into my workshop. Thank you very much and have a great weekend.